Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi and let us take a look at the stories for today. The Supreme Court has granted Sebi time till August 14th to complete its probe into the allegations of stock price manipulation by the Adani Group. So, how is the Sebi probe likely to proceed and what will be the challenges along the way? Bhaswar Kumar has the answer.
The initial findings of the Supreme Court appointed panel have, it seems, given a lifeline to stocks of Adani Group companies, which continued their upward march on May 23rd. In the preceding 3 days, the stock of the group's flagship company, Adani Enterprises, shot up 38%. It has not just recouped all of the losses it made since late January, but even turned a multi-bagger. In its January 24th report, short seller Hindenburg alleged that the Adani Group had engaged in what it called a brazen stock manipulation and accounting fraud scheme. It also accused members of the Adani family of creating and managing what it described as a vast labyrinth of offshore shell entities in several tax havens. The report claimed that some of these entities were used for market manipulation. It also identified 38 Mauritius-based entities allegedly controlled by Vinod Adani, the elder brother of Adani Group chairman Gautam Adani, and his close associates. The Adani Group has refuted Hindenburg's allegations in a detailed 413-page response. An expert committee was later formed by the Apex Court to look into regulatory issues. In its initial findings, the panel said that there has been no regulatory failure on Sebi's part with regard to Hindenburg's allegations against Adani of violation of minimum public shareholding, non-disclosure of related party transactions, and price manipulation in its stocks. But this doesn't necessarily mean that the group has received a clean chit. As a Business Standard columnist put it, there are facts about the Adani stocks that remain smelly, despite an apparent clean chit from the committee. This brings us to Sebi. On May 17th, the Supreme Court granted the markets regulator a 3-month extension until August 14th to submit its probe report into Hindenburg's allegations against the Adani Group. While Sebi was to submit its report by May 2nd, it had asked for an additional 6 months, citing the complexity of the case. Sebi has also said that the allegations that it had been investigating the Adani Group since 2016 were factually baseless. Sebi has said that it has been probing alleged violations of the minimum public shareholding norms by the Adani Group since October 2020. But Sebi has its task cut out for it. As Bloomberg columnist Andy Mukherjee explains, after a 2019 rule tweak by Sebi, it is no longer necessary for a foreign fund to be able to disclose every ultimate natural person at the end of the chain of every owner. Thus, Sebi may never be able to prove anything, even if the Adani Group has violated the minimum 25% public shareholding norm. According to Mukherjee, Sebi is unlikely to find success while probing the alleged non-disclosure of related party transactions too. Sebi has picked 12 transactions for closer examination from among the charges made by Hindenburg against Adani. So, what can be the expected outcome of the Sebi probe? One of the aspects being investigated by Sebi is whether there has been a violation of rules related to maintaining public shareholding of at least 25%. The suspicion raised is that entities linked to Vinod Adani had bought shares in a number of Adani entities, leading to a breach of the minimum public shareholding rules. An emailed query seeking a response from the Adani Group on the SC Expert Committee's report and allegations against Vinod Adani was unanswered till the time of filing of this report.
Now the question is that the shareholding which is declared in the public domain is maybe in the name of X, Y, Z, whatever it may be. Now that itself is not suffice for coming to a conclusion whether there is a violation of public norm or not, unless until I can trace that shareholding back to Adani or Adani family. Now, then comes the problem that all these shareholders who are resident outside India are either in a tax haven countries or the countries in which we do not have a reciprocity arrangement. That is one. Even if there is a reciprocity arrangement, what happens when you cross the first step, then you go to next. So say, for example, there are 10 layers in a holding structure. Now, I go for company one. When I go to company one, then I find that the parent of this company is three different entities which are in three different locations. I will have to then go back to those three locations. Then in that three location, if I find that company which was first intermediary is owned by five people in five different locations. So what happens? This complexity keeps on increasing. And since you are dependent on a third party to give you a document or give you research or give you bank statement, you cannot go like a Indian Sebi and say to a company XYZ that I want this data tomorrow. Sebi does not have that power to seek data in a time-bound manner.
The other aspect SEBI is investigating is whether there was any manipulation of stock prices in contravention of existing laws.
To find conclusive evidence of share price manipulation and similar issues is a difficult task. And not only in India, across the world, you must find cogent evidence which proves beyond reasonable doubt, like as if in a criminal trial, that there was a stock price manipulation and that was done by A or B or C.
So, what's next in SEBI's Adani probe? A multitude of challenges, because of which experts are not very optimistic about SEBI being able to get to the bottom of Hindenburg's allegations. Ultimately, this could mean that the haze of suspicion surrounding the Adani group could persist.
Looks like the stocks of Adani Group companies are back on the track. After hitting a rough patch, they now seem to be on the onward journey. Well, Delhi Metro just completed 20 years of its journey. For millions of people of the national capital and its satellite towns, it has become a lifeline of sorts. But of late, it has been in the news for a different reason: indecency in public spaces. Cops in civil clothes will now travel with you to ensure that it does not happen. So what will change for your travelling experience? Tushar Verma does a reality check.
In over 2 decades of its journey, Delhi Metro has seen an entire generation grow up alongside. They grew up seeing the metro as if it was always there. Clean, air-conditioned coaches and picture-perfect stations provided ideal hangout spots too. But of late, some youngsters, it seems, have been putting other travelers in a spot. Not only with their public display of affection, but with acts which can be appalling to many, if not most. For the past few months, social media platforms have been flooded with videos and photographs of people indulging in indecent acts. Some took objections to a young woman who shocked many by boarding a metro wearing bare essentials. These incidents prompted Delhi Metro Rail Corporation, or DMRC, to issue a statement asking commuters to wear appropriate clothes and to maintain decency. Announcements are also being made warning action against those who indulge in indecent acts. Swati Maliwal, the chairperson of the Delhi Commission of Women, also issued a notice to Delhi Police and DMRC demanding action against a man who was caught on camera purportedly indulging in an obscene act. With a barrage of reports calling out such acts, the DMRC has decided to increase the number of flying squads who keep an eye on various metro lines. The squads will have police and CISF personnel. Presently, there are 5 flying squads of 3 to 4 personnel each. Delhi Police has also said they will deploy about 100 personnel in civilian clothes to patrol metro coaches. So how will it change your travel experience? And will it address the problem?
In my opinion, this can be viewed as an opportunity to make public transit safer for all, especially for women. And I think this can be done if the scope of the patrolling is extended to ensure one, safety of women and all commuters, and the second is if data is collected. So, for instance, WRI India had conducted a study in Mumbai in the Metro One, and we had asked commuters on what can be done better, right? And then when we categorized it from a gender lens, we found that actually women, most of the suggestions that they had made were 52% were about like enhancing safety, 30% was about convenience, and about 18% on service quality. And when you compare that to men, it was 53% of their comments were about better service quality, about 29% on convenience, and about 18% on safety.
Usually, public places have police presence which is needed to maintain law and order. Delhi Metro constitutes a significant part of the public transportation system, and safety and comfort of commuters are of prime importance. However, does the deployment of 100 police personnel lead to a strong vigilance system?
So I think there are sometimes you do need vigilance in patrolling in public spaces. Studies suggest that people are safer, feel safer in transit systems. For instance, seeing uniformed officers, that sometimes does enhance a sense of safety. Again, tracking these complaints with the gender lens. Also, these annual surveys that DMRC collects, that they do collect feedback, they do collect, sentiments of commuters, that can also have a lens of gender. That will really help. So I think empowering passengers to report these incidences and provide feedback can contribute to definitely like a safer and a more inclusive traveling experience.
The DMRC has certain powers. The Delhi Metro Act 2002 gives it the power to take all such measures as it deems fit for the safety, security and convenience of passengers. The DMRC has also issued a circular stating that any person found indulging in any obscene or indecent act in any metro coach or station shall be liable for prosecution under the relevant provisions of law. Legal experts say there are various other provisions as well that work to ensure safety in Delhi Metro.
There isn't any differentiation between policing in civil clothes or policing in uniform. These are internal notifications. When we're talking of Delhi Metro, the jurisdiction of Delhi courts as well as Delhi police will come into effect. Now, whether that train is passing through UP, parts of UP, parts of Haryana, that shouldn't be an issue. Secondly, Delhi Police Act, Section 23 of the Act empowers the Delhi police to do any such acts in order to uphold public peace. And since the entire endeavor is being done with an intention to enhance public trust and avoid public nuisance, so obviously the Delhi Police, under the Delhi Police Act of the concerned section, draws its power. Also, not every act of the police requires a pre-magistral order. So we also have a section 151 of the CRPC empowers the police that whenever they have intelligence about some incident, cognizable offense of some incident, they cannot wait for a magistral order. So they have an inherent power to act.
Deployment of police inside metro trains and stations will act as a deterrent for potential offenders. Along with increasing vigilance, passenger data can also be leveraged to make everyday commute a better experience for all ages and genders.
Metro is also shielding travellers from the scorching heat. Temperatures in Delhi have been hovering above 46 degrees Celsius for a while now. But crude oil-linked companies are keeping their cool. Due to easing commodity costs, they have reported strong March quarter results, and related stocks have gained up to 84% in the past 1 year, as against a 14% rise in the S&P BSE Sensex. But will this rally continue? Lavisha Darad finds out in this report. Shares of crude oil-linked companies, which include paint and tyre firms, have seen a steep rally in the past 1 year, while Asian Paints, Shalimar Paints and AkzoNobel India have rallied up to 37% in a year. Tyre makers Seat, JK Tyres, Apollo Tyres gained up to 84% as against 14% rise in the S&P BSE Sensex. Analysts link this upswing to softening raw material prices coupled with calibrated price actions by paint and tyre companies. However, going ahead, they foresee derating for related stocks in both these sectors as valuations get stretched.
Valuation are not very cheap for tyre or even paint companies. You take any company in paint, Asian Paint or Berger Paint, I don't think anything is trading at reasonable valuation. Asian Paint is 70 times trailing 12 months. You take Berger Paint 70 times, Kansai Nerolac 47 times, Indigo Paint 55 times. AkzoNobel, which is the MNC company, is trading the cheapest at 35 times. Average is 55 in paint. In that AkzoNobel is the only thing. So in tyre, average is 33.
In the January-March quarter of FY23, tyre makers like Seat, Apollo Tyres and JK Tyres saw consolidated net profit jump over fourfold year-on-year, with EBITDA margins expanding up to 553 basis points, whereas paint majors like Asian Paints, Berger Paints and Kansai Nerolac saw net profit growth of up to 401% year-on-year and up to 500 basis points expansion of EBITDA margins. That said, though earnings growth could trickle near-term benefits, analysts warn rising competition and pricing war to play spoilsport for both paints and tyres in the long term.
The decorative paint industry is expected to grow in mid-teens across the medium term, led by reduction in repainting cycle to 4 to 5 years from 8 to 10 years earlier, acceptance of better paint products in the smaller towns, and upgradation of premium brands in cities and large towns. The entrance of deep pocket conglomerates, including Grasim and JSW, may lead to intense competition in the industry. Grasim's capacity target of 1.3 billion litres is massive, and with the launch of its products in 2024, Grasim will be catapulted to the second spot. The other recent entrants include JK Cement, Astral and Pidilite. Thus, the growth factors for paint industry over the medium term remains robust. The long-term risk of incremental growth being split with a deep-pocketed player looms large. Given the valuations the large paint companies are trading at, we expect structural derating over the next couple of years as the competition unfolds, although earnings growth will be assured over the medium term, though with lower margins. Tyre companies are notorious for high quarter-to-quarter volatility in margins due to changes in key raw material, which is rubber, inventory changes and timing of price hikes taken. New capacities being set up by the local players, we may see pressure on sales growth and margins after a few quarters. Till that time, the trajectory of rubber prices will be important to track. For traders, a large upmove is behind and there are no fresh events in the near term. Hence, they may not get the upside volatility in these stocks in the next few weeks.
Today on May 24, Q4 results, global cues, foreign flows and crude oil prices will dictate market trends. Instead of a prized asset, 2,000 rupee note has suddenly turned into a liability. While people like us can easily exchange it, those dealing in Hawala transactions are in a soup. But what is Hawala? Tariq Ahmed decodes it for you.
The withdrawal of 2,000 rupees denomination notes by September 2023 has triggered panic among black money holders in India. They are reportedly exchanging the unaccounted currency notes of 2,000 rupees for gold and Hawala in the grey or unaccounted market. Hawala is an informal way of transferring money without any physical movement of the same. It is mostly used as an alternative method of remittance that operates outside formal banking channels. In several countries, including India, Hawala is an illegal practice. But outward remittances from Gulf and certain other countries to India continue to be heavily reliant on the Hawala system. In this system, money transfer is carried through agents. When an individual wants to send money to his relatives in home country, he hands over the same to a Hawala agent in the foreign country. At this moment, the sender receives a unique code that must be shared with the receiver. Next, the foreign agent connects with the Hawala agent in the country where the money needs to be sent. The latter delivers the equivalent money to the recipient in the home country. At this stage, the recipient must reveal the code to prove that he or she is the intended receiver of the money. Later, the agent settles the transaction among themselves by cash or properties. The Hawala system functions on trust between the agents, sender, and receiver. The agent keeps a record of the transactions and charges the sender a small amount as transaction fee. Here, agents also earn from foreign exchange. The fee that is charged for Hawala transactions is less than bank transfers. Also, the system allows those who don't have access to the formal banking system to send and receive money. As it doesn't involve paperwork, it is relatively faster than the formal channels of money transfer. Because these transactions are not reflected in official statistics, the remittances of funds from one country to another is not recorded as an increase in the recipient country's foreign assets or in the remitting country's liabilities, explains an IMF paper. As a consequence, value changes hands, but broad money remains unaltered. The efficiency of the system also attracts terrorists and dealers of contrabands to move money from one place to another. The wealthy who want to evade tax use Hawala to anonymize their wealth and transactions. The system is informal and hard to regulate. So, in countries like India, Hawala is illegal. Foreign Exchange Management Act of FEMA and the Prevention of Money Laundering Act or PMLA are the legislations that prevent Hawala activities in India.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Players in the grey market for dollars are also cashing in after the RBI's move on 2000 rupee notes. The Hawala rate for a dollar has touched 91 rupees, up from 85 rupees to the dollar a few days ago. That's all for today. For more news and analysis, please log on to business-standard.com.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.